Welcome to Ivanoff Retirement Insights with Paul and Travis Ivanoff. The father and son team at Ivanoff Advisors and Ivanoff Wealth Management helps clients grow and protect their wealth. Paul and Travis understand the importance of having tax-advantaged, reliable income in retirement, protecting your assets, and helping you achieve your retirement dreams. Now, Ivanoff Retirement Insights.
Well, if clarity and confidence for your financial future is what you're looking for, then you are in the right place. I'm Casey Biddy here with Paul Ivanoff, insurance agent with Ivanoff Advisors, and Travis Ivanoff, investment advisor representative with Ivanoff Wealth Management. In every episode, we are breaking down the most important topics in retirement. So if you're listening and looking for a clear picture of where you stand, do not forget that the guys are offering their Ivanoff Retirement Roadmap to our podcast listeners. All you've got to do is give us a call, 714-553-1490, or head to ivanoffinsights.com to get connected with us. So a lot of great stuff for us to cover today, guys, starting with the Federal Reserve continuing its pause on interest rates. That leaves 4 meetings for it to do any rate cutting this year. Economist Lauren Goodwin tells CNBC that the Fed will do as little as possible for as long as possible. Take a listen.
The Fed can only do so much to tackle things like changes in trade policy, changes in the political environment, geopolitics playing a bigger role in inflation expectations as an example. And so the only thing that the Fed can do is look at its tools related to interest rates and decide whether it can move the needle on inflation expectations. It's an uncomfortable position for investors and for the Fed as well to have to wait and see how the data evolves, but we expect them to try to buy that time.
But if you're close to retirement, you don't have the luxury of waiting. So, guys, how do you help clients tune out all the economic noise and focus on the things that they can control?
Yeah, I think it just starts again with the Ivanoff Retirement Roadmap. And, you know, the market's going to go up, down, or sideways every single year. Every single day, that's what's taking place. And if we have a sound plan that we're confident in with the right risk tolerance, it's not necessary to tune in every single day to different news stations and hear the, you know, all the fear that's being built in retirement and the Fed lowering interest rates. Some of that is going to be impactful on your bond portfolio and spending and inflation. I mean, there's a lot of things that's going to impact. But on the other hand, if we've done a good job of building out your retirement roadmap and we see that, you know, income's the outcome that matters. Look, we have enough income to retire. We're going to participate in the market, but we're going to make sure we do it at the right risk tolerance. If you're conservative, let's make sure we have some portfolios that don't carry a lot of risks, right? So the idea behind this is to stay in your lane, right? I wouldn't turn into every single day and see what the news is and tune into that to figure out what's going on. I would make sure that you have a sound plan. You're set up for distribution. Now, if you're in retirement and you're still only focused on accumulation and you're really just swinging for the fences and trying to make as much money as you can in retirement, that might not be the best plan. And that's where you're going to see all these different trade policies and tariffs really start to impact. But if we can build out a sound roadmap where, you know, hey, you know what, I'm confident in the amount of money I have to spend. I know there's a level of risk to my portfolio that I'm comfortable with. Well, we should be fine then at that point, right? You don't have to look every single day. In fact, in April, when we saw the big downturn, which was like one of the largest downturns in the last 70 years, or at least quickest downturns, if you would have panicked and sold out of all your portfolios, you wouldn't have got the jump up in the next couple months that took place. So as long as you have enough in the market that you're comfortable with and you have other monies that aren't participating in the ups and downs, and we've done a good job on your retirement roadmap, I would encourage my clients to tune out of the noise because you're just going to drive yourself crazy. There's no point in watching the news every single day. And that's what's dictating how happy you are or what your portfolio is going to do. We need to make sure we have a proper retirement income plan so you can get through the ups and downs. There's always going to be something around the corner that's going to dictate market performance. And if that's what you're living and dying off in retirement, I don't think you have a sound retirement plan.
It's also, Casey, a lot of our clients that retire, we ask them what they're comfortable to live on, and more often than not, we're going to show them exactly how to get that. And then a lot of times we'll ask, what's your dream number? If you really wanted to do what you wanted to do and have fun with the kids, take them on trips, what would you really like? So it's very important to have a plan.
Absolutely. Let Paul and Travis and their team help you focus on what you can control with their Ivanoff Retirement Roadmap that they are offering to our podcast listeners. They can help you determine where you stand and what adjustments that you can make now. 714-553-1490 is how you reach us, or online at ivanoffinsights.com. So guys, an article I was reading this week on Bankrate called the Roth IRA the MVP of retirement savings. It talked about the after-tax contributions and tax-free withdrawals. However, the Roth does have limitations. The amount you can contribute declines and is eventually eliminated at a certain level of income. And the money has to sit for 5 years before you can access it. So, guys, how can you work around these limits to make your Roth a retirement MVP?
I actually we meet a lot of clients that haven't yet retired and are getting ready to retirement maybe in the next 5 years or so. So oftentimes I ask them, hey, do you have a Roth option on your 401k or an after-tax option on your 401k at work? So if you're continuing just to add money to tax deferred, we might want to loop in your accountant and ask them, hey, how much room do I have in the current tax bracket? What would this do to my taxes if I started putting more money into my 401k at work that offers a Roth option? I think that's the first thing I'm going to look at if the client is continuing to work, because a lot of times they don't even know it exists or, to my surprise, quite understand the benefits. Like I use an analogy, do you want to pay on the seed or the harvest? Well, if we're paying on if we're going tax deferred, sure, we're not going to pay on the seed. We're going to get that right off for our contributions. But when we go to pull the money out, we're going to pay the taxes at that time. And you have required minimal distributions at age 73 or 75, depending on your age and whatnot. I would rather see our clients, in some cases or a lot of cases, let's pay on the seed. Let's let the account grow tax-free. So let's look at your 401k and see if there's an option to go into a 401k that has a Roth or an after-tax element to it. And then from there, we start looking, if you're already retired, and we start looking at your required minimal distributions and they're through the roof. Let's say I've seen clients with their RMDs at like $170,000 a year by the time they hit RMD age. Well, and they're not big spenders, so that account's just growing and growing. So rather than, have no control over your taxes, we start looking at doing Roth conversions. Now, we need to be aware that you can't touch the gains on a Roth conversion for up to 5 years once you do it. And every year you convert, you cannot touch those gains for 5 years. But that's when we loop in their personal accountant or an accountant that we use and make sure that, we're aware of Roth conversions and what it does to your Medicare, IRMA, what it does to your tax brackets. But instead of just waiting until RMD age, if we start Roth converting, that maybe 5-10 years down the line, you want to buy a lake house or a vacation property or help one of your kids with a wedding or with a down payment. Well, now we have this account that's been growing tax-free, which is going to be more efficient in retirement. Furthermore, if something happens to you and you are to pass away, now your kids are going to inherit some tax-free money instead of all this tax-deferred money, which, depending on their careers, could help them, significantly in their own tax status. Because if they inherit all this money and they have to start paying taxes on it, plus they make a good salary or have a great career, now we're just giving away more of that money. So by utilizing Roth conversions or even backdoor Roths, which is if you're over the limit where you can contribute to a Roth, that's another strategy we can use. There's a lot of good tax planning that can be done, but we're going to make sure we loop in an accountant or their personal accountant to make sure we, dot our I's and cross our T's when we're looking at this. But Roths are a very, very powerful tool, and, more people should be taking advantage of them when it makes sense. And again, Roth conversions don't make sense for everyone. We got to look at your individual situation, but that's something we cover in our holistic approach to planning, and we make sure we build it out in our Ivanoff Retirement Roadmap.
Yeah, so also, Casey, a lot of retirees, when it comes to Roth conversions, they really don't understand it. And at first they would think, why even do it? I don't want to pay all those taxes. But what we're talking about here is to do a strategic Roth conversion. You don't do it all at once. You just start picking at it every few years. And in the end, it's going to help yourself out, your spouse, not to mention the kids are going to benefit greatly. In the end, would you rather have taxable or tax-free?
Do you want to pay on the seed or the harvest? Paul and Travis can help you navigate the challenges that come along with the Roth IRA and Roth conversions, and their complimentary Ivanoff Retirement Roadmap is a perfect place to start and could help you with a customized look at how a Roth IRA could fit into your overall strategy. So give us a call, schedule some time on the calendar to talk through this, 714-553-1490, or you can visit us anytime at ivanoffinsights.com. So guys, not sure if you attended a high school graduation this year, but if you did, you may have been surprised at the large size of the graduating class. As it turns out, 2025 is the biggest year for high school grads in our nation's history. And a lot of these kids are going to need financial help when it comes to college. Now, there's a newer trend among boomers to skip their adult children and just go straight to the grandkids with their inheritance. So they're giving the grandkids the money while they're still alive so that they can actually see them using it. So I wanted to ask you guys if you've seen this with your clients, and does it take some special planning, or maybe are there any mistakes that we need to be watching out for with this too?
Well, we're seeing with a lot of our clients that have been very successful throughout their careers, they're actually helping their grandkids and their kids. For example, if you have a child that they need a house, it's very expensive to live here in California. We're finding a lot of our clients are helping their children purchase houses. And in the end, it's why not help them while you're around? Mm-hmm. Make memories, and you can actually see the accomplishments instead of waiting to the end and then all of a sudden they get this huge inheritance. What we found out, most people plow through these inheritances without a plan very quickly. Mm-hmm. So it's good to have the parents jump in, help out their kids and their grandchildren while they're still around. They can enjoy it.
For sure. Travis, what do you think?
Yeah, and we're constantly exploring all the different variations of planning you can use for grandkids. We have 529 plans. We have UGMAs, UPMAs, custodial investment accounts. Some clients prefer to give just cash or opening trust funds. There's different solutions for leaving your grandkids money. It just depends on what we're trying to accomplish. Do we want it for school, or do we want it to, be for a home? So maybe if we're saving for a home, we don't want to use the 529 because that's going to be pretty specific to college or some kind of trade school and education. If you think, I don't know if my grandkids really going to want to go to college, and I don't want to pigeonhole them and only being able to use this money for education, well, then we might look at a custodial investment account. The reality is they can use that account. It doesn't have as many tax benefits to it, but at least the money has more flexibility than a 529 plan. So that's a conversation we need to have in our office. Maybe they want to leave the kids some cash, and we want to make sure, hey, if you're leaving the kids, if you're gifting the kids cash, then maybe we want to just start passing that down as a gift. And I believe the gift's somewhere around $18,000, but you can start gifting the kids cash so they can start doing what they want, and you can, they have more control over it. So it really depends on what's the use of money and how much control do you want the government to have over that. Do you want to make sure they're using it for college? Maybe they want to buy a house, maybe they want to buy a car, maybe they want to save for, their own, own retirement plan already, which maybe they're giving them money and they're adding into a Roth. So there's a lot of strategies we uncover for college planning. There's even strategies that have to do with using life insurance, believe it or not, which has some really good flexibility and things that we can do as far as planning for life insurance. So it depends on what's the purpose of money. What do you think your grandkids are going to need that money for? And then we identify all the different plans that we can use and see what best fits their grandkids' need or what it seems to be the need right now, instead of just going, hey, 529 college. Well, maybe there's some other options out there for them.
Well, if you are thinking about gifting to your grandkids or helping with college costs while you're still here to see the impact, it's a wonderful gesture, but like the guy said, it does require some strategic planning. So Paul and Travis can help you structure those gifts in a way that's going to let you support your loved ones without putting your own retirement at risk. So get your conversation started today. 714-553-1490 is how you reach us. One more time for you, 714-553-1490, or you can visit us at ivanoffinsights.com to request your complimentary Ivanoff Retirement Roadmap. Thank you so much for listening to Ivanoff Retirement Insights. Make sure you subscribe wherever you get your podcasts so you never miss an episode, and we will see you next time.
Investment advisory services offered through Ivanoff Wealth Management, a registered investment advisor firm. Registration is not an endorsement by security regulators. By contacting us, you may be provided with information about insurance products, including annuities offered through Travis Ivanoff, California CRD number 325275. The firms are separate entities. Annuity guarantees rely on the financial strength and claims paying ability of the issuing insurance company and are not offered by Ivanoff Wealth Management Incorporated. Read your contract for restrictions, limitations, or penalties. Ivanoff Wealth Management is not licensed in all 50 states. To find out if Ivanoff Wealth Management is licensed in your state, please call 714-553-1490. Ivanoff Advisors is not affiliated with Ivanoff Wealth Management Incorporated. Advisory services are offered by Travis Ivanoff through Ivanoff Wealth Management. Insurance services are offered by Paul Ivanoff through Ivanoff Advisors. The aforementioned are unaffiliated companies.